What's going on, traders? So in this video we're going to talk about the key factors that we need to follow to successfully trade this difficult consolidating structure. And in the first part of the video I'm going to share with you guys my live trading session so you guys can see the trades I took or the trades I did not take and what was going through my mind. And in the second part of the video we're going to go into a little bit more details on how exactly we find a high probability setup in this structure. All right, so that was my trading for today, and you guys can see that the market was very slow and very choppy, and there are a lot of structures when we are trading. There are strong uptrends, strong downtrends, there are trading ranges, there are uptrends into trading ranges into uptrends, there are downtrends into trading ranges into uptrends. There are different type of market structures, but today we had a very tight and very slow trading range consolidating market. And what we need to understand when we're dealing with this type of market is that it's going to be very hard to find a high probability setup, and it's going to take some time for prices to get to key levels and key entry points. Key entry points are our trend lines, support and resistance lines, and EMA. So since it's very hard to find a high probability setup, the only tool we have to stay safe are our short-term trend lines. Because there's a rule in price action that after trend line will break, prices will attempt to make a new extreme. And this is not only for the bigger channels, this is also for the tiny channels. As you guys can see on an example right here, prices are working high, we have a break, new high. Prices are working lower, we have a break, new low. Prices are working higher, we have a break, new high, and so forth and so forth. This is how a market and prices act, and this is what price action do. So our short-term trend lines are going to keep us on the right side of the market when we are unsure what's going to happen, because the short-term trend lines also will lead us to high probability setups that are going to be located at the key levels, key entry points. Now, it takes some time for these key levels to get established. So in the meantime, prices will probably hover around the middle of a trading range, and this is the number one error that traders make, is that they try to trade in the middle of trading ranges. Under any circumstances, you cannot try to pick setups and be greedy in the middle of trading range, because in the middle of trading range, this is a no man's land, and there's a lot of fake outs, a lot of traps, and just overall not high probability setups, and it is very hard to read what's going on exactly in the middle. So we're going to use our short-term trend lines, and we're also going to avoid trading in the middle of the trading range. We want to sell the highs, buy the lows, those are the high probability setups, and we want to fade the breakouts if the momentum is strong enough. So now that we know how we should trade this structure, let's talk about how today started, because it started with a very tiny consolidation, congestion, and you guys can see prices are stacked next to each other and EMA is in the middle of those bars. So this is a clear small little trading range, and prices were working higher. As the prices are working higher, I don't really have much price action to work with. So what I did, I tried to measure this tier of a trading range. I don't remember how exactly I had it. It doesn't really matter. I tried to measure this tier of a trading range and put it to the other side, because measure moves don't only apply to lags in trends but also to tiers when it comes to trading ranges. So this was my first target where the prices may head, and they actually worked there, were very close, but it was only natural for me to use this measure move because that's all I have. I have this trading range and I have one bullish leg working higher, so I have to use all the tools that I got. Now remember, we have a break and a new high. Prices are working lower, we have a break and a new low. It's still, the resistance here just got set up and we don't have it confirmed. So it is tempting to take this first entry long, second entry long as a failure, because we are coming off the second tier of a trading range, but this resistance is not really proven yet and you don't know whether we're going to continue higher or not. We shouldn't, because this uptrend played out with a break and a new high, but you don't know that. Prices push through EMA and we are in the middle of trading range, so you have to sit on your hands right now. You're probably expecting for prices to reach down here, and here there will be a potential setup, but it didn't. Prices pushed above the EMA. Once again, what you gotta do? Yes, you gotta draw the short-term trend line, because you want to be safe. You want to know what the market is most likely going to do. You have a break, you have a new high. Now here would be a first good trade according to our rules, because the resistance now got confirmed. We have a double top right here. Prices pull back and retested the double top right here, and we're selling off. Now I only marked it for educational purposes only, because this signal bar is way too big and it's not enterable using the correct risk to reward ratio. So I only marked it in case there would be next time a better signal bar, something like this. But in this particular instance, the signal bar is too big and we cannot enter this. And prices once again push lower. So once again, you have to draw the short-term trend lines. And at this point on, prices are definitely starting to clutter in the middle of the trading range. And a lot of novice traders, they can already snap and they can jump the gun and they can look for entries and force trades. And let me tell you something, this is probably number one psychological mistakes that novice traders make in this type of trading ranges, is that they are very impatient and they're just trying to look for any entries that they're there. And you know, this stems mostly from the need to make money. When you feel the need that you need to make money, you will be forced into bad trades, you will jump the gun, and that's not really the proper mindset you want to be. This is why I'm a big advocate of keeping your trading as a side hustle for as long as period of time as you can. Don't really quit your job too early, because that's what traders do. They're doing pretty well on sim, they quit their job and then they go live, but they realize that they have to pay bills with their income from trading. So there's substantial amount of pressure right now, because they can't afford not to make money. But what you need to understand is that it is actually okay to sit on your hands and not to make money. You can afford to not make money today or 2 days, because there's going to be plenty of opportunities to make money in the future. So don't feel like you have to make money. Don't feel like you need to be rushed. You really, in the day like this, you really need to practice the mental skills that you honed. And this is trading with patience. You really need to be patient and you really need to sit on your hands, because you can be sitting here and watching this for 2 hours and there is no proper setup, high probability setup. Even though there is a first entry short pullback, second entry short, and once again, first entry short pullback, second entry short failures, and we are pushing above the EMA and it would have worked for a scalp. These are not high probability setups. Just, I'm going to repeat it over and over again so it really goes to your head. So the first good setup that I saw was this second entry long right here, because as we are pushing higher, we're getting to this upper tier of the trading range. We have a new high right here, first entry long, pullback, second entry long. EMA rejected the prices. This is a nice bullish bar and we broke this trend line. So you know what's probably going to happen. We're going for a new high. So this would be one of the very first high probability setups that was enterable according to our strategy. And you guys can see we made the new high, pullback. We actually made another leg to a new high and a second leg to a new high. Now, once we made 2 more pushes to a new high and a nice big bearish bar, this is where I kind of adjusted my resistance line. And guys, by the way, the support and resistance lines, they are not static. They are not something that you glue to the chart and you don't move with this. These are areas and you can adjust these lines as the price action keeps revealing you more and more. So don't feel like the support and resistance line are static. They are just areas on the chart and they're serving you to find the key levels. So this was the actually first trade that I took and I got filled on, because I didn't get filled here. And you may be wondering why I was planning to save today with the limit orders, because I didn't even get filled here. But if you take a look at the right side of the market and look at this axis, the moves are very, very small. So even if you go for only 8 ticks, it is a fairly big scalp portion when the market is really slow like this. So I felt like I want to be safe a little bit. I don't want to lose unnecessarily. So I would rather miss a trade than to lose a trade. And I caught this nice trade. Prices pushed below EMA and you're now coming off the resistance. So you're probably expecting prices to get to down here. And you have a first entry long, pullback, second entry long, 2-legged move down. But this is not ideal bar and you're far away from EMA and you're already starting to get into middle of trading range. And you have first entry short, second entry short. But once again, you have a little bullish body. You're far away from EMA. You have a break and you're expecting a new low naturally. But I feel just a little bit more aggressive. But you can make a case for going short here. And look, we have a break and a new low. We have a first leg working lower, pullback, second leg working lower. And notice this, how sharp of a move this is. This is almost 90-degree move. And like I keep mentioning, 90-degree moves, they will get pulled back. The pullback will appear very shortly after. They will get rejected soon, these 90-degree moves. So as we are far away from EMA and we have this beautiful bullish bar, and we are finding support at this important key level that was very proven at the beginning of the day. This is where I felt that this is a high probability setup. Unfortunately, it rolled up higher without me so quickly that I got left behind. But as you guys can see, this is the key that, this is how do you trade this structure. You avoid the middle and you wait for prices to reach the key entry points, and you use the short-term trend lines as a guideline to help you to filter the losing trades. Prices are coming off the bottom, and there's a nice first entry short pullback, second entry short trap, because people are going short on a second entry away from EMA after breaking a new low and when we're coming off the low. So this is a trap. Plus we're going sideways, you have a failed break lower and instant reverse up. So this is a very aggressive trade. I'm only going to mark it for aggressive for a little bit more advanced traders, because novice traders don't really like going long below EMA like this. But once you see how, what kind of trap it is and how many people got trapped here, you want to take this long. And price is pushed above the EMA, so once again you have to draw the trend line. You have a break and a new high, perfect price action. EMA is holding prices and market is correcting now. So difficult, slow day. Hopefully you guys didn't get chopped into pieces. Remember, you really don't need to make money. If you feel like you need to make money and you're forcing trading, that's not the proper mindset to be in. You really want to be calm, relaxed, in the zone. You want to be confident. And every time you feel like you need to make money and you're pushing trades, you're trying to look, for setups, they're not even there. You're jumping the gun, you're entering way too early. That's what you want to avoid. So remember, it is okay not to make money today, because tomorrow you will make money. And if you guys was patient, if you guys were patient right here, you can see there were quite nice setups later on in the day. So there's nothing wrong with first few hours sitting on your hands. So I'm gonna wrap it up. I hope you guys enjoyed the video. Hopefully you find it helpful, and I'm gonna see you guys in the next one. Take care, everybody.